Excited? Hello everyone, welcome back to the channel. I hope you're all doing great today. And if you're new here, don't forget to subscribe, because this is the place where real crypto intelligence reaches you long before it hits mainstream news. Now, today is a genuinely important moment for XRP. 5-spot XRP ETFs are officially live, and with the latest listing, we now have the first real multi-venue ETF ecosystem built entirely around XRP. And just as this was happening, the global crypto market went through a violent, liquidity-driven sell-off, exhales sharply, one that exposed just how fragile the deeper market structure still is. But hidden inside that chaos is the most important signal of all. XRP's exchange liquidity is collapsing, and it's now approaching a level of scarcity we haven't seen in years. Curious. So let's break down what's actually going on and why this moment matters so much. To understand this story, we need to start with the macro picture, because every major market move begins there. We're in an environment shaped by tightening global liquidity, fragile debt structures, and the unwinding of leveraged positions across both traditional markets and crypto. Whenever liquidity contracts, correlations spike, and the result is exactly what we just saw: a fast, disorderly sell-off that exposes how overstretched the market really was. Crypto is transitioning away from a high-leverage environment into something driven much more by real structural demand, and that shift is incredibly important for XRP. And let's be clear, this sell-off wasn't a retail panic. It was triggered by heavy institutional and algorithmic selling. Wintermute alone dumped nearly 9,300 BTC. Coinbase saw over 8,000 BTC move out. BitMEX saw another 8,000 leave the system. Binance lost more than 5,000 BTC. Bitwise added another 5,000 to the liquidation wave, and Bitfinex recorded almost 3,700 BTC in outflows. These weren't exchanges selling. These were institutional desks, quant firms, and highly leveraged traders all unwinding at the same time. That's how you get a classic liquidity vacuum. Bitcoin dropped around 6 to 8% and touched the mid-80K levels, putting it more than 30% below the highs, near 126K. Ethereum followed with a 7 to 10% decline. XRP and other major assets simply moved alongside the broader risk-off shift. Across the entire market, roughly $600 to $650 million in leveraged positions were wiped out. This is what a market reset looks like. It flushes out excessive risk, restructures the foundation, and sets the stage for the next major move. And yes, this phase always feels uncomfortable because, in moments like these, traders are competing with institutions, high-frequency models, supercomputers, and algorithmic flows. Short-term predictions almost never work in this environment. Patient accumulation almost always does. Excited. Today is a big moment for XRP because the 5th-spot XRP ETF has officially launched. The new 21 shares product, trading under the ticker TALKS, just went live on the CBOE. It's a smaller exchange, so the early trading volume looks modest, but honestly, that part doesn't matter anymore. Pause. What really matters is what this represents. ETF issuers have started securing XRP supply, and that's something this market has never experienced before. Within the first half hour, the combined volume of the first 4 ETFs crossed $11 million. Within an hour, it moved up to $13 million, and Franklin Templeton quickly became the early leader. By the middle of the session, flows were already approaching $19 million, and late-day estimates suggested somewhere between $30 and $40 million in early demand. Bitwise alone traded over 245,000 shares, more than $5 million of liquidity. On day one, exhale sharply. And remember, this is just the first day. This is not the peak. This is the baseline. But the real story is happening behind the scenes, and it has everything to do with liquidity. Exchanges are being drained of XRP faster than ever recorded. Since February 2025, more than 6.45 billion XRP has been pulled off exchanges. That's a staggering 28.6% decline in tracked balances. Coinbase is basically wiped out, down 99.93% from earlier this year. Gemini and Bitstamp show the same kind of extreme depletion. At this point, US exchanges barely have any XRP left at all, and this raises the obvious question: when ETF demand grows, when institutions enter, when retail starts buying, where exactly will they get their XRP from? Because once OTC sources run dry, everyone is forced back into the public exchanges, and that's where real price discovery takes place. That's when scarcity becomes visible. That's when structural demand collides with collapsing supply, and that's where a major repricing event begins. We're seeing this globally as well. Upbit in Korea currently holds the biggest pool with around 6.18 billion XRP, about 38% of tracked supply. But look at what's happening elsewhere. Bitso saw deposits spike by 235%. MEXC had almost 15% inflows, and Bitstamp lost over 4.5% of its supply in a single day. Most exchanges are bleeding XRP quickly, and while some traders are trying to position for dips, those inflows don't last long. This is exactly what a maturing asset looks like. Supply starts to consolidate. Demand expands. The available float disappears. Long-term holders quietly accumulate. Today, even though around 16 billion XRP sits on tracked exchanges, the majority of it isn't actually for sale. It's simply being stored by users. The real liquid supply is much smaller than it appears. And on top of all this, institutional demand is rising at the same time that liquidity is collapsing. ETFs are pulling demand forward. Custodians are removing supply. Payment pilots are absorbing tokens. And US institutions can only buy from public markets because Ripple still can't sell directly without SEC approval. So all of that demand is being funneled into a market where supply is rapidly disappearing. This is exactly how supply shocks form. Curious. Something big is happening behind the scenes right now, and most people still aren't paying attention. Pause. The SEC has quietly begun meeting with major players like Coinbase, BlackRock, Galaxy Digital, NASDAQ, Citadel Securities, and even Robinhood. And the conversations aren't about creating new crypto rules. They're about something much bigger, the integration of tokenization into the traditional financial system itself. Excited, we're talking about tokenized market infrastructure becoming part of how the world settles trades, manages clearing, handles ownership rights, updates proxy systems, improves disclosures with AI, and even moves value across blockchain-based rails. This is the groundwork for a fully tokenized capital market structure, and it's already being built. And in that environment, XRP naturally fits right into the role of a settlement asset. It already has the liquidity, the regulatory progress, and the institutional alignment that banks and payment providers need. Ripple's upgraded license in Singapore now allows expanded institutional payment services across the entire APAC region, meaning real banks, real fintechs, and real settlement flows are entering the picture. Now, in the short term, the market is still going to look choppy. We're likely to see instability, some leverage get flushed out, ETF accumulation continue, and exchange supply shrink even further. It might look messy, but historically, this is exactly the kind of environment where disciplined accumulation pays off.
But the long-term picture is where everything changes, and it's the part most people completely miss. XRP is entering a structural setup it has never experienced before. We're seeing institutional inflows deepen, ETF demand emerge, regulatory clarity finally fall into place, tokenization adoption grow, exchange liquidity dry up, and US supply remain restricted. None of this is normal. It's not technical analysis. It's structural transformation. When price eventually discovers levels above $3.40 and beyond, it will happen under a totally new market framework, one that looks nothing like previous cycles. Markets always shift quietly long before the public narrative catches up, and that's exactly what we're witnessing right now.
XRP is transitioning from a speculative trading token into an institutional settlement asset, from retail-driven liquidity to built-in structural liquidity, from hype-driven demand to real-world financial utility. And this is how major repricing events begin. Quietly, structurally, and eventually, inevitably. If you found value in today's breakdown, make sure to like the video and subscribe to the channel.